Happy Wednesday, everyone. Welcome to another edition, #AskRobCo. What a week it's been in the real estate property lending market. News is flying in as we speak. Breaking news. Maybe we should be daily instead of weekly at the moment with so much happening. We've heard from Rishi. Lockdown 2.0 finished yesterday. This is our first day. I'm looking forward to getting my hair cut later. Hopefully, James, you're going to be doing the same, I imagine. I'm looking forward to that.
Lined up in the next few days, Rob.
Exactly. The breaking news that we're hearing this morning and yesterday, commercial, high street retail, Arcadia, Debenhams, Bon Marsh, high streets being decimated. We will discuss that a bit further down the line in today's show. We will be discussing the latest figures on mortgage approvals. We will be discussing the latest sales figures and intel that we have for you every week live. And we will be answering any questions that you have and discussing the key points that we've seen commercially, residentially, in the property and lending market over the last week. Thank you everyone for joining. Hope you're all well. And let's get straight into it. James, let's go straight into the latest data and the latest intel that we've seen over the last week. Why do we start there? And that's handout 1 on the right-hand side if you're on your computers, and if you're on your phones, hopefully you would have received it, and if you didn't receive it, we will send it to you. Let's go straight into the data, because the data and the intel that we are discussing every week just keeps giving and giving and giving, and it is the indicator of what is happening on the ground. This is your live feed, everyone. This isn't 2 months behind, 3 months behind, Land Registry or HMRC or the Bank of England. This isn't what happened 2 or 3 months ago. This is what happened from last Wednesday on the call to this Wednesday, and the data that's fed through. So if we look at the first handout of our week 36 post-lockdown 1, now we're moving into post-lockdown 2, week 1. And that data, which is dated week commencing 23rd of November to the 30th of November, a 1-week period, week 47 of 2020. And the first headline piece of data that we continuously look at as the trend of what's going on in the space is the volume of new instructions coming on stream within the data that we receive and the data that we analyze in the areas that we specialize in. And we've seen, again, very low volume of properties coming on stream. That's your 369 figure highlighted in the blue, and 369 instructions. That's 2 weeks in a row now, very low level numbers. Remember when we came back from the school summer holidays, I say, or the school holidays, the non-normal ones for this year. We were 700 properties. That's massively decreased now by 50%. Throughout October, we were in the mid 500s, so very solid, lots of instructions. And now we're in the mid 300s, very low activity levels for the entire year, the lowest levels outside of lockdown 1. And the question I threw out last week was, is that because of lockdown 2.0? So just less properties coming on because not as many people are going into the agents or asking the agents to come in? Or is that we've seen so much supply come on, actually it's filtering downwards because of the volume? We will probably find out the answer to that in the next 7 to 14 days, because next week could be a turning point. It might be too early. Or are we already now building into Christmas, which is literally 3 weeks away? And does that mean that the new instructions won't start coming through to higher levels until the 2nd or 3rd week in January? That's the question, and we will only know the answer in a week or 2 weeks when we report the figures to you. Let's move further down that line to the column of all columns, the standout reference point from a valuation perspective, a lender's perspective, an industry perspective, is the sold properties that have taken place. And this is the key number that we really look at as the guide to where the market is heading on a weekly basis. And the key indicator here is your 235 number on the sold properties within the last 7 days. And that figure tells us that the most amount of transactions took place in the last 7 days for the entire year, and one of the highest weeks within the last 4 years, excluding that 2016 March tax change, where you saw a huge volume of transactions to beat the stamp duty change, sorry, the tax change that took place then. So that indicator alone is huge in terms of what's happening on the ground. Yes, you're going to see further down the line when the land registry or HMRC numbers come through, you're going to see these figures. This is the last 7 days. The volume of transactions is at a record level for this year, and that hasn't slowed down because of lockdown 2, and because all of those deals were in the pipeline, they are carrying on. So I believe that next week we will see another 200 plus week, and that will be more or less 6 or 7 out of the last 9 or 10 weeks with those numbers, which is completely unprecedented. So let's be clear, to try and have a broader outlook on what those numbers mean. That kind of volume repeatedly being seen week after week has not been seen for many years, and without question hasn't been seen in the last 3 or 4 years. So that's completely unprecedented. And when you move over to the right column, where we look at the 2, 3, 5, 10 million market, for all of you who are private banking or retail banking doing the upper tier, upper ticket lending, that is still 1 week short of the entire month, because obviously we need the data to come through to close out November, and November only closed out on Monday of this week. But already what's significant is the far right column, the 10 million plus, the number 9, that's the most amount of transactions in the entire year for 10 million plus. And we still have the data for the last few days of November to be fed into that, to which we'll let you know next week. Record volume of super prime transactions have taken place within the last 3 or 4 weeks, and that is a testament, and that is where the market is at. Record volume, record trading at all levels, and super prime has seen its best period, and we will finalize those numbers next week. On top of all of that, we've got the latest figures that have come through from the Bank of England in terms of the mortgage approvals. And you will remember when we discussed this a month ago, the numbers that were being thrown around were the mid-80s expectation. We said on this show, I expected 100,000 barrier to be broken. That hasn't happened. It's fallen short, and the approvals for home purchases that have been released are 97,500, which again is unprecedented and has not been seen since September 2007. You're talking a 13-year gap of mortgage approvals. And let's see, when the November figures come out, let's see that 100,000 being broken. I am extremely confident with the data that we're providing you with on a weekly basis, and the volume of transactions and work that we're seeing on a daily basis. I'm convinced that the 100,000 has been broken in November, and when we get those numbers, we will be reporting to you that that is the case, and that is where the market has been leading to and been led to. James, what do you want to add on those fascinating numbers and pretty groundbreaking numbers.
Yeah, sure, Rob. So let's just start. There's obviously been some subdued instruction numbers the last few weeks, but I personally don't believe this is heading towards a stock shortage. I think it's just the seasonal nature of where we are in the year. And hopefully we'll see those instruction numbers pick up in Q1 2021. This last week, amazing news for the residential property market, sort of a record sales week here in London. So it's sort of a wild Wednesday outside of the high streets, which we'll talk about shortly. Just moving on to the sort of the Chancellor's spending review, I think we're going to move on to next, last week, in which he announced the £7.1 billion National Home Building Fund, which will sit alongside his £20 billion housing support wrapper, which is also made up of his £12 billion affordable homes programme and a further £4 billion levelling up fund for communities to bid on. There is further calls in that spending review. We were hoping to see something in regards to the stamp duty, whether that might be an extension to the current scheme or any new initiative. We're still waiting to hear on that for some further clarity.
Thank you, James. To close out on those mortgage approvals and that 13-year high, and it's something I've been tracking for the last 27 years because it is really an important barometer of activity and sentiment. Sentiment and confidence drives markets, and the sentiment and confidence is well and truly at the moment within the residential space. Just touching on product and pricing before we move on to the high street retail commercial space. Product and pricing, we saw some changes as we entered into lockdown 2.0, and we shared with you the data of an uptick on product pricing in terms of the interest rates, especially with the higher LTV products. And what's interesting that the Bank of England have released this week is that the level of lending on those mortgage approvals is below what it was prior to lockdown 1.0, and that's really, really interesting. So the average or effective interest rate was 1.85% back in January, and in October it was 1.78%, so 0.7% difference lower in October 2020 compared to pre-pandemic levels. And that is a key driver to the sentiment and the confidence that people have in home buying at the moment, because whilst interest rates are at these record lows, then it's feeding fuel in the market with the stamp duty window that is currently in place. Let's go to the commercial market. And has there been a week like it in the last decade? It is pretty fascinating what is happening to the high street. One could say it is being decimated in terms of job losses and square footage that we could say currently is without question uncertain. Just throwing in the Arcadia Group, Debenhams, Bon Marsh, the collective square footage space on the high street and the job losses that are involved in that is to a scale that really hasn't been seen in decades. And it is more or less the last nail in the coffin to what was the high street as we knew it, and that is pre-lockdown, because the market was already heading in that direction. Let's understand that online retail has been growing and growing and growing, and the old model of footfall in the high street and shopping centres to a degree has changed. And what we're going to see in 2021, and it's what fascinates me the most about the high street and retail, is that's going to innovate, it's going to change, and it's going to look completely different. because we're losing, and there's a tremendous void now of this space that's going to be coming on stream. And it's going to be fascinating to see how that evolves, who takes it, what the product is, and how the high street completely rebrands itself moving forward. And I think it's going to set a precedent for the next 10 years. It's going to be the new face of the high street. And I'm fascinated and can't wait to see how the market and the industry grabs that space and turns it around, and what incentives there are going to be. James.
Yeah. Rob, just wanted to come on to that. So the Arcadia Group, we've got 444 stores across the UK, including 13,000 jobs, which have been put at risk by the administration. I just wanted to talk about some of the stores which are involved in Arcadia. So you've got sort of Topshop, Debenhams, and some of the others, all of which have their landmark stores on Oxford Street. We've already seen parts of House of Fraser, part of that building, their landmark store on Oxford Street, Oxford Circus, part of the upper parts of that being converted into offices. It just seems like Oxford Street is being decimated this last 9 months by the collapse of chains, franchise stores. So it'd be interesting how that market evolves, what happens to that space, who the occupiers are, and any transitional period which we see in the commercial retail market.
Absolutely. It is a fascinating piece. And although it might come across as very doom and gloom today, this week, moving forward to Christmas, the high street requires that period of time and footfall, etc. I've been in the industry long enough to know that there's always a moment in time in residential, commercial, retail, innovative product where you get this kind of seismic change. And as I said, I repeat, I'm fascinated to watch that space in 2020, as much as I'm fascinated to understand the investment market. Where is the investment market heading? If it's pulling away from the high street and it's pulling away from the shopping centres, is it going back to what we said last week and focusing on heavily on the build to rent space? Is it focusing on care homes? Is it focusing on the areas now where you're getting more confidence and more reliance and better returns? Maybe bringing HMOs to that. And then the big question mark about the buy-to-let market and the trends we're seeing there, and we touched on it last week, but the lenders are now coming to me on a daily basis. What's going on in the buy-to-let space? What are going on with rents? What's going on with void periods? What's going on with occupancy? What's going on with yields and returns? What's going on with gaining possession? Because the vacant possession challenge on those properties is becoming the most challenging we've faced in a generation. That space and that core area alone is facing challenges that we haven't seen in decades. So to wrap that whole commercial space up, where are you seeing the strong demand and investment opportunities around the commercial space, James?
In terms of commercial, obviously the most impacted has been retail, with some of the events we've spoken about. Also, offices have taken a real hit at the moment. We've covered that in the last few weeks, especially those sort of flexible serviced office space providers, just with their own nature being flexible, their shorter term sort of certain rent periods have been impacted by this 9 months we've had. That said, we anticipate those more flexible office space providers to recover possibly quicker than some of the other providers in that space. We've also seen, in terms of industrial retail warehousing, that has been something which has been able to withstand this period a lot better and remains a fairly strong sector in that commercial market.
Brilliant, thanks, James. Just something that I didn't touch on previously, and for all of you credit risk and sanction on the call this week, the point that I've been drilling for the last month about premiums being paid and the demand being so great that there are inflated prices being agreed. 10% of the transactions that we're seeing in the data that we're providing with you are achieving over and above marketing figures and rates. And for all of you on risk and credit and sanction, just be careful and be aware of that. It's not a problem that someone is willing to pay 5, 10% over and above what a marketing price is to secure their home or their investment. The most important thing from a credit risk perspective is that you're aware of it and they go into it openly knowing that that's the case, so everyone knows where they stand when the lend is sanctioned or the transaction takes place. So it's not a question that the deal shouldn't happen. It's all about the transparency behind the deal, where the willing buyer knows that they're overpaying, whether it's an off-market transaction or openly marketed transaction, and the lender understands that based upon the information they're being fed. So I've repeated this point for the last 3 or 4 weeks, and I just want you all to be aware that's one of the biggest challenges you're going to face in an upward market like we're seeing with this volume and demand, is understanding the price point of those transactions and where that sits internally with your risk and sanction and credit teams. And if any of you want to discuss that further, it's probably the speciality that I'm working on the most at the moment, have the most knowledge and the most exposure to, because we're seeing so much volume, we're seeing the trends and the tendencies on a daily basis. What else have you got for us, James?
Well, I was just going to quickly elaborate on your point there, and just how we've got sort of an upwards trend at the moment in terms of residential prices. Those buyers that are very motivated to acquire property at the moment are maybe just bidding a fraction ahead of the market in terms of those sort of 5, sometimes 10% premiums we've been seeing the last few months just to get deals over the line.
Yes, and you know, the nationwide data yesterday, I think month on month, like for like, they're virtually a 1% increase, which is rapid growth in any market in any times, more specifically in the current climate, with the pandemic and the uncertainty and the volatility that we're seeing. It makes everything just more challenging from a risk and credit perspective. What else have you got before we close out this week, James?
Yeah, sure. So I've just got a bit of property news. There's been some calls this week for the government to appoint a minister for renting on top of the minister for housing, which follows some of the growth we've been talking about in the build-to-rent sector. We know that 28% of the UK is living in private rented accommodation, with this expected to grow to around 40% come 2025. I know the government are releasing incentives and sort of branding that generation buy to try and offset those figures. But that would be an interesting one just to see, to try and sort of increase the quality of rental property in the UK. Other property news, you've got Countrywide rejected a bid from Connells of 82 million for a takeover, which was unanimously rejected by the board. However, we understand the private equity deal which is being proposed. In the housing market, we had a record sale in the country homes sector. In Devon, Mammoth House, which achieved in the region of 8 million, which is a grade 1 listed house, 164 acres, 37,000 square feet. So one for the sort of country homes, that market is one which we've seen performing extremely well this year.
Brilliant, thanks, James. Before we wrap up today, big thank you to all of the people listening, following, watching. We've got a tremendous audience: Guernsey, Jersey, Isle of Man, Gibraltar, Zurich, Geneva, Luxembourg, Far East Asia, when they stay up for the show. Thank you so much for supporting both live and across all the platforms that we present. We've had over 5,000 registrations now for this weekly event live, and your support has been incredible. The last point to close out for this week and this edition is the volatility and the uncertainty that we are seeing is beyond unprecedented. And at the same time, and I repeat, uncertainty is the new certainty. I'm sorry, all the girls and guys in risk and credit, that's not what you want to hear. It's just the reality of the markets that we are working in currently. Huge volatility, huge uncertainty. The one thing I will keep repeating, I believe that in 2021, on the back of what James has said, the government are going to drive this economy through property, through real estate, and through generation buy. And I think that is going to be the key indicator and the key economic performer in 2021. And it's imperative that we continuously provide you with the data and the intel to either support that and back that, or if it goes in a different direction, to make you aware as quickly as possible so you can make flexible, agile decision makings within your organizations to protect the banks and the lenders and your ultimate buyers and borrowers from everything that we're being exposed to. So thank you everyone for joining. Thanks for your great input. Thanks for your questions. Thanks for following on LinkedIn, Instagram, TikTok, Facebook, Twitter. Thank you all for joining. Thanks for your input, James, and we will see you all same time, same place next week. Have a great week. Take care and be safe and be well. Thank you, everyone.
Thanks very much, everyone.